Hi guys, Adrian here, and today I want to ask you, which are you, an investor or speculator? In this video, I'll explain a little about the differences between investors and speculators. Investors. An investor is an individual or organization that acquires assets with the intention of having financial returns over a period of time. This period of time may vary from a number of months or even years. Generally, after much research, an investor acquires a security, which he is sure that will go up in value after some time. The primary concern of an investor is to minimize risks while maximizing his or her returns. An investor's portfolio may include stocks, bonds, savings, including acquired capital in the Forex market, real estate, commodities, and collectibles that can generate regular income, funds for retirement, or any of these combinations. One of the greatest investors of all time is Warren Buffett. I'm sure you've heard of him. He's among the world's wealthiest. He is referred to as the Oracle of Omaha, a nickname given to him with the investment community as his views and comments are closely followed. Let me share with you some of his famous sayings. Never invest in a business you cannot understand. Risk can be greatly reduced by concentrating only on a few holdings. You are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right. Be fearful when others are greedy and greedy only when others are fearful. Unless you can watch your stock holding decline by 50% without becoming panic-stricken, you should not be in the stock market. It is optimism that is the enemy of the rational buyer. The ability to say no is a tremendous advantage for an investor. Much success can be attributed to inactivity. Most investors cannot resist the temptation to constantly buy and sell. An investor should act as though he had a lifetime decision card with just 20 punches on it. An investor needs to do very few things right, as long as he or she avoids big mistakes. Always invest for the long term. It is not necessary to do extraordinary things to get extraordinary results. Remember that the stock market is manic depressive. Wide diversification is only required when investors do not understand what they are doing. Now, much of this applies also to the Forex market, and a lot of people are investors in the market looking to trade long term. Let's move over to what is a speculator. Investors and speculators are poles apart in playing the market. While the investor calculates his every move, a speculator takes more risks in the hopes of raking in more money than usual, without any bias or loyalty to any article of trade. A renowned speculator in our day and age is George Soros. He was made famous for making $1 billion in one single day in September of 1992. He speculated $10 billion on a single short British pound trade. He laughed all the way to the bank when his profits reached almost $2 billion ultimately. As a result, he was famously named as the man who broke the Bank of England. It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. George Soros. So, are you an investor or speculator? The good news is that trading suits both types of character. Thanks again for watching, and please remember to subscribe to our channel below to receive notifications so whenever a new video is released you don't miss any. And again, for a free system, also check out our link in that description below.